This story that you broke, Cory, actually has some internal information from OpenAI, and it goes to show some like pretty jaw-dropping projections that the company is making. I mean, specifically around the losses, which we've been talking about at length here on the show recently, but then also in terms of where it expects its revenue to go. So for me, the top line was that they're expecting their losses to get as high as 14 billion in 2026. Remember, the company just raised 6.6 billion, right, in a round. So its losses could be that high. But we also took a look at some of the some of the places where it expects the revenue to come from. And we'll get into this. Maybe this is actually a good place to start, because one of the things that astonished me was that ChatGPT is what OpenAI expects to lead its revenue, which it expects to increase. It expects its revenue to increase 100-fold by 2029. And the bulk of that revenue is going to be coming from ChatGPT, according to OpenAI's projections, which flies completely in the face of everything we've been discussing on this podcast and everything we've expected, which is that the API and the other companies using this GPT technology was going to be the driver of OpenAI's revenue. But it does look like the company's expecting ChatGPT to be the bulk of that revenue. I mean, it already is, but throughout the upcoming history. What do you make of that, Cory?
It surprised me too on the top line. I mean, I think first of all, you need to view these projections and these numbers like you view a lot of startup projections, which is this is in many ways the best case scenario, especially on the top line. Like
Right. I'm assuming this is what they sold investors on, which means that that big round was sort of
right.
predicated on investors believing this story.
Yeah, 100%. And I think, look, when you have growth so far that puts them, sort of in Google and Facebook territory in terms of revenue growth, early in their history, yeah, they're going to lean into it and be aggressive and say, yeah, by the end of the decade, we're going to generate as much revenue as Nvidia or Tesla. Like they definitely went big with it. And then, yeah, when you dig into that, it's like, okay, maybe you can view those revenue figures skeptically, and I think we all should. But I also think, let's actually take some of their forecast at face value. And I do think the actual breakdown of that revenue was pretty revealing and interesting. I mean, you have a company that says their main product right now in ChatGPT, which is both the consumer subscription product. Also, there's an enterprise product for ChatGPT. I don't quite know how that breaks down between the two of them in that revenue bucket. But yeah, they're saying this is going to be the moneymaker for, or at least the revenue driver for years to come. And it seems like the API revenue is maybe they're kind of giving it away more than they are actually like charging the full value of it, and it's also more easily commoditized. So yeah, I did think that was pretty interesting.
Ranjan, what did you think when you took a look at this projection and saw that basically the company is expecting to be really, it's a chatbot company? I mean, that's what it is. If the majority of its revenue is coming from ChatGPT, it's going to be a chatbot company, and not just a chatbot company, but a paid chatbot company. I mean,
yeah, no, that one jumped out at me, and Cory just kind of hit at the most important point that the API revenue could be commoditized, because actually, I mean, I have been arguing for a long time that that's actually where the money's going to be. It's in the enterprise, it's in the API access side of things. And maybe they laid out the case. They're arguing it's going to be on the actual consumer facing side, which was interesting to me because even though I've so strongly believed the other way, maybe it is in the user interface, the UI, the UX side, that they launch great products that everyday people will use. And that's where they're going to win. Do I think it's correct or right? I don't know, but it's an interesting way to raise $6.6 billion.
Is there a limit to the way that this generative AI phenomenon can continue to grow if the leader, which is OpenAI, ends up not really making a lot of money on the API? Like at some point, it's like, why are you developing these foundational models if it's, I guess maybe it's just to make the chatbot better? What do we think about this? Cory?
Well, I think if you just think about it, if I, as a user of these products, as someone who is also trying to cover, these companies that are growing quite big as a reporter, it's hard for me to keep up with sort of how each of these foundation model companies are um, actually moving ahead of each other in different aspects of how they actually can do math, do science, do sort of legal stuff. Like it seems like between Mistral versus OpenAI versus Anthropic, like it's getting somewhat. These foundation models are in very tight competition with each other, and the value I think OpenAI is saying is in the consumer and enterprise brand, the not sort of what you're developing for other application developers, but they're kind of casting themselves, I think, as like an essential service that they can provide a lot of value to consumers on, and can drive up subscription prices. And that's like an easier story to tell in a fundraising. So maybe that's why they're leaning into it. And, no one's going to necessarily hold them to account to it if
Right.
it turns out any differently. But yeah, I think it's an acknowledgement that they think the API business is more of a commodity.
Right, which is amazing because that is effectively a tacit acknowledgement by OpenAI admitting that it's not going to be able to stay ahead of its competition in building the state of the art models.
Yeah, I think that it's possible. There's other products they say they're going to develop that are quite big. We don't know what that'll look like, but obviously,
Yes.
we know there's a lot that's not out in the world that they've teased, like Sora and kind of a Perplexity type of competitor too.
Yes. The old future, quite big potential product.
Yeah.
We know always comes through.
Well,
Ranjan, you're
but
going to say something.
Yeah, it is interesting though. I was just thinking about like a company like Google create the killer consumer facing product and then build off of that, build an advertising business off of that, build Google Cloud and Google Workspace and all these other more enterprise focused efforts. Maybe that is the way they're pitching this, because I think like versus some boring enterprise API type of company that just is people are trying to build on, and where the cost of those actions go less and less and less, build it being the true consumer facing brand that introduces the whole world to generative AI. I know I've been incredibly bearish on OpenAI, and suddenly I sound like I'm pitching them for a fundraising, but
this deck really worked for you, man. You're like, take my money, Sarah Fryer.
Yeah.
Ranjan looks at one slide, all of a sudden he's knocking at the door.
Yeah, show me a Masayoshi Son deck, and I'm first in line.
But that's okay. So that's just looking at the revenue, and then things get really interesting because Cory, and you published this. This is again coming from OpenAI's internal projections and financials. I think this is my favorite chart I've ever looked at from a tech company. This is their revenue versus their costs. And it is one of those things where like, oh, you look at total revenue and I'm like, oh, that's pretty nice, $4 billion. And then it starts getting into the costs. So immediately, and this goes right to our question about we've talked about in the past couple of weeks, subprime AI crisis, and can these AI companies sustain themselves? And you look at these costs and you go, So Microsoft's revenue share right off the top of that $4 billion is $700 million. So it looks like what they're making something like 20% of all OpenAI revenue. The compute to train the models then takes another $3 billion off. So, thinking about profitability with those two alone, you're just barely profitable. So then you get into compute to run the models, and that's another $2 billion. Now you're in the red, and then it just adds. Research compute amortization, which is Ranjan's favorite line item, down $1 billion. Employee salaries down $700 million. General and administrative $600 million. Data $500 million. Hosting $400 million. Sales and marketing $300 million. And you go from this very nice looking $4 billion in revenue after you add in all these costs to a $5 billion loss. And that excludes stock-based compensation, by the way, which is going to be another major cost. I mean, Cory, when you first came across this chart, what was your reaction?
At first a bit of confusion and mostly trying to understand. I mean, look, I think this is like a new type of business, and so how they run their numbers, how they do their accounting, is going to be an interesting thing to watch, right? Like I remember I interviewed some startup one time, like maybe 4 or 5 years ago, about like why they hadn't hit their revenue projections or why their numbers were slightly off or whatever. And he was like, well, look, we're not running Alcoa here, where some like giant, old company where like we know how the business runs. It's run the same way for a long time, blah, blah, blah. So I think just first, like understanding how OpenAI is sort of thinking about its business and where the costs are coming from, that, in itself is really interesting. It also is not surprising. I think like Sam Altman has said himself, like OpenAI is going to be one of the most capital intensive companies in history. I think he said the most capital intensive startup in history. So like if we take him at his word, which as we know, maybe you shouldn't always do that. I do think in this case, like he's probably telling the truth. He is not, saying that, this company is not going to cost a ton of money to build. And that is, by far the biggest cost is compute. It's the data centers. It's actually being able to mostly train these models. The smaller cost of the compute bucket is to actually run them, which is called inference. And that is they're saying they're lowering those costs, but training is it's a huge expense.
Yeah, not much lower. 2 billion to run versus 3 billion to train. So, but yeah.
Yeah, they're good, but that's going to expand over time, essentially, the training costs.
Yeah, and I think the idea of these are completely new businesses. There are two numbers that jumped out, which I think that I'd not seen anywhere else before, and I thought were really interesting. First, sales and marketing at 300 million out of 4 billion in revenue. That's around 7%. A traditional SaaS company is spending 40 to 50% on sales and marketing. And we have talked about this a lot, that and people have, if you've ever used them, they don't really have enterprise customer success. They don't have the old school SaaS sales guy out there. And maybe they'll create that all with agentic AI, but at least in the near term, if they're really trying to move in that direction, the spend is so low on the marketing side. It's amazing to me that they think, unless they're going to really understand how to scale that. Then the other was gross margin, which you'd reported 41%, where typically software is, 70% is the baseline. So the actual profit for revenue or margin relative to your revenue is so much lower because of all the actual foundation model building costs and how that actually scales. How they even, I am curious what these discussions are like with investors. Like, do they actually present genuine plans around what these graphs look like over the next 3 years, or it's just kind of, we'll figure it out?
No, I think they do. If you, at the risk of insulting, very,
just do it, Cory.
Where are you going, Cory? Come on, go.
Like, look, I wrote about this, like, so, but like if you look at the big checks that made up this round, it's a lot of people that had reasons beyond just like a clear financial rationale for investing in OpenAI. You had Thrive Capital and SoftBank writing really big checks. Like Thrive is already very much, they are in the Sam Altman business. They are in the OpenAI business. They are deep in it. They very much have hinged their reputation, I think, on a relationship with Sam and with OpenAI.
And OpenAI is going to open an office in one of Kushner's New York buildings.
In the Puck building, yeah.
It's just count
the ways Josh Kushner has made money off of OpenAI.
Is any part of this industry not round tripping? You have Microsoft investing in OpenAI and OpenAI using Microsoft Azure credits. You have Kushner investing in OpenAI and OpenAI opening an office in his building. It's wild, but
no, totally.
But more to the point, Ranjan, I'm curious, when you saw the numbers, did you we've been talking again about like, is this business sustainable? Now we've looked at the numbers. What do you think? Do you have answers to the question?
So this is a tough one because, again, as I seem to be like the ultimate OpenAI fanboy 5 minutes ago, I actually got less of a clear picture of where this company is going, bearish or bullish, after reading this. And the reason is, the thing that made me most excited is to one day read the S1 filing of this company for the IPO, because it's so weird and complex. I guess that's the only consistency from the last few months is everything gets weirder. Even Microsoft, it reported, I think the cut of revenue was 20%, which was higher than previously thought. There's still there you had some information in there around they've been able to expense last year $500 million of cloud compute, I think it was.
So first half of this year, yeah.
Oh, so first half of this year already.
Yeah.
So Microsoft's relationship with OpenAI is bananas. Like I cannot think of another company, certainly at this scale, but even smaller, where I've seen something that contorted. And then even just the way from the accounting side, and it's fair. This is a completely new type of technology. And I actually, what you're saying, Cory, I do kind of agree with that. That the idea that no one knows, there's no standard accounting practice for how to amortize the value of a large language model, because it's so different. In the past, you build software, you have like essentially zero marginal cost. It can go forever. This is a much more cost intensive, like marginal cost intensive way of doing technology. So basically it became more clear to me, no one has any idea how to actually do the accounting for this, to do the financial projections for this, and we're all in the same ultimate business, basically.
And I think you're right to put your finger on the the Microsoft OpenAI relationship being really key to all of this, not just in assessing it. It does muddy the waters on its financial statements. I'll tell you, you look at sort of the actual cash leaving OpenAI, and it's a lot lower than you would think compared to their income statement losses, because so much of the expense is tied up in Microsoft compute credits, which is not technically a cash item. So that muddies the waters a little bit. I don't know how long they'll be able to sustain that sort of pace. And then
we have no idea how. Was it ever finalized what of the initial $10 billion was cloud compute?
I don't know if it's ever been fully reported. I think it is the majority of it, is my understanding. Whether that means it's 7 or 8 billion, or I think it's in that range, is my understanding. But my colleagues had a great story also earlier in the week, basically saying that Sarah Fryer, OpenAI's CFO, has told employees that, look, we're going to spend some of the $6.5 billion, racing also to develop data centers with other potential sort of companies. And essentially, like, they're in a race to kind of get compute and to get data center space. And Microsoft, as one company, isn't necessarily able to get a lock on all of it. So that relationship is, I wouldn't necessarily, it is slowly, they are very much joined at the hip, but both are trying to figure out, how do we not become too dependent on each other?
I think we should put this all together, because we're getting some projections in terms of what they're expecting to spend, right? They're expecting to spend 9.5 billion potentially on training alone, right? Up from 3 this year in 2026. That's just in 2 years. And Cory, you report that their loss, excluding stock comp, could be 14 billion in 2026. That's a time where they're expecting, again, ChatGPT to be the lead in terms of their revenue. So let's just take our head out of the spreadsheet for a second and think about this logically. I mean, is there a chance they could potentially recoup all that money from ChatGPT subscriptions? Like, how much better would ChatGPT have to get? Because I don't think it's an awareness thing at this point. Like Ranjan mentioned, they are getting as much word of mouth as they could potentially get, and they still are where they are in terms of ChatGPT adoption. So how much better does ChatGPT need to get to start to justify those costs? I would say it would basically have to be AGI. Ranjan, why don't you take this and then we'll go to Cory?
I agree that it's interesting that I was just thinking about, is it the consumer or the enterprise side that gets commoditized? And you can make a case for or against both. And on the consumer side, that idea of how much better does it have to be? I would say, I mean, even out of people I know, most people aren't paying $20. I think I'm sure we all are to one of the services, but like for the everyday average user, is this something you even need to pay for or want to pay for, given the current state of how these things work? I don't think so. So I think like it would have to completely transform or revolutionize, I don't know, like entire new products and entire new problems being solved for everyday people versus it can just write you some stuff or it'll help you with code that'll only hit a certain segment. Or I'm trying to even picture what that product would be that every single person would be ready to pay $20 a month or more.
Yeah, Cory, is this feasible?
Yeah, I think it's going to have to be also just way deeper in the enterprise. I think like just having a consumer product is, it's going to have to be, pretty insane. It's going to have to be very agentic, where it's doing things for you, to use their jargon. But I think if it's able to revolutionize like, actual, there's money, there's a lot of money in the enterprise, I would say, like if it can actually like improve sort of companies' efficiencies and bottom lines there. But like look, I think right now the bear case is like a lot of this revenue is from early adopters who are sort of playing around with the stuff. Like that's how I would characterize my spending on ChatGPT. It's like I haven't really figured, like yeah, I've listened to like plenty of people say like, oh, here's how you really get into it. Here's how you do it really well, and it just hasn't quite stuck. And I'm humble enough to maybe to say like maybe I just don't get it, and like maybe I just haven't integrated it into my practices very well. But yeah, there's definitely like some early adopter sort of effect going on that will need to expand beyond that.
Yeah, and on the enterprise side in particular, we've been talking about it. Like if enterprises all went in because they had to, and if they're not seeing a return, they could just as easily pull out pretty fast. So we're going to see what's going to happen on that point.
Yeah.
Okay.
Totally.
Last point for me. So you mentioned in your story, we talked about this a little bit. We don't know what's going to happen. We don't know when their Microsoft credit is going to run out. And do they factor the fact that that credit could be completely gone? Maybe that's what's blowing up their costs. And do they then, because you mentioned they're basically either giving away or giving at cost what's coming through their API. So do they then need to start charging a lot more to developers building on top of this stuff in order to sort of stem the losses they're already expecting to see?
Right. Well, I don't think, there's nothing in the documents that really answers either of those questions necessarily. I do think when you see the compute amortization, it is a line that is going up. In the they're going to be expending more on research compute in the coming years, and I would imagine it is with my guess is that it's with the assumption that they won't be able to get as many like research credits
Right.
from Microsoft for it, or they'll have to go to another vendor and have to pay more,
Yep.
or something like that.
So one quick follow-up on that front. When are they going to need to raise again?
That's
Next year?
Yeah. I think that is like the question. I think, look, they had $1 billion on their balance sheet when they went out to raise this $6.6 billion. And they also have like a few billions of like a credit revolver that they raised on top of it. So my very back of the end, and they still have, I think, billions in research compute left from Microsoft. My back of the envelope would say 2026 at the latest. But this is their competitive advantage is over like Anthropic is clearly Sam Altman being one of the best fundraisers in the world. I think they're going to try to keep leveraging that and keep losing money to stay ahead. Like if no one's pushing them to like get profitable, they're going to keep spending money on that compute.
And on that, I'm glad we got to compute amortization. One thing I had to bring up.
Listeners, you should see the smile on Ranjan's face when he says the words compute amortization, by the way. It's as happy as I've seen him in months.
I know, because from like a pure student to business, it's interesting. It's like something completely, the way they're approaching it and how large language models like should be thought of in a company's financial statements is a completely new thing. But my favorite part of your piece is that OpenAI is emphasizing to investors a metric of profitability that excludes some major expenses, such as the billions it's spending annually on training its large language models. And I have to give credit. There's a Bjorn Jeffrey who had tweeted back, it's time for LLM adjusted EBITDA. And for those listeners who remember the famous WeWork community adjusted EBITDA, I actually don't think it's crazy that they're going to say we are profitable and create a completely new type. And maybe it's going to be the future, or maybe it'll be like the thing we all remember. But LLM adjusted EBITDA is I don't think it's impossible that we see that phrase in a filing one day.
I think you're 100% right. My brain went there. I covered WeWork. Like it is very much a place where you're like, oh, I've seen this movie before. I don't think we know all the answers yet in terms of what are the real drivers of the business. That's like an area I'd like to like still be reporting on, and actually try to answer. Is it legit to kind of strip a lot of your training compute costs out of your cost of goods sold? Like these are the accounting questions and the business nerd questions that I think are going to be relevant to like how do we actually think about whether this is a good business or not. Like that's kind of like the overarching question around AI. It's like, is this okay? The technology seems cool so far. You know, it's really expensive. Is this going to be a good business?
Can I weigh in here on the should you include training costs in your profitability statement?
Yeah.
GPT-3 becomes obsolete the second GPT-4 comes out, right? So the idea that training costs are eventually going to like, taper off or level out, or you don't need them and they're not part of your overall mix, to me is just so crazy. And I know that we're the cool-headed and nuanced show, but I just need to say you cannot take training costs out of your profitability statement. There's no basis in reality to do that. It's crazy.
I love it.
And I have to get that off my chest. I think that's absurd.
It can be cool-headed and nuanced and factual. Like
I'm losing my chill here. I came into this very zen, but I'm no longer. Training costs are not included in your profitability. We're profitable except for our number one costs. I mean, come on.
Yeah, you nailed it, I think. Yeah.
Anything else, Ranjan?
I think that captured it. The fiery, passionate statement. You cannot remove your goddamn training costs from your profitability statement.
Cory, thank you for joining us.
Thanks, guys.
Have a great weekend. All right, everybody. We'll be back on the second half to talk about Tesla's robotaxi event and a couple other big stories from the week. Back right after this.